Picture this. You're staring at your trading screen, heart pounding as your account balance drops by the second. Your hands are shaking, but not from excitement, from pure terror. This isn't supposed to happen. Trading looks so simple when you started. Click buy, watch it go up, click sell, count your profits. Easy money, right? Wrong. Dead wrong. Here's a truth that will hit you like a cold slap. 90% of traders don't fail because they can't read charts or predict market moves. They fail because they can't control the person staring back at them in the mirror. The enemy isn't the market, it's you. Don't wait. Support the channel by liking and subscribing. It really makes a difference for our development. Let me tell you about Mark Douglas. Picture a man standing in an empty house in 1982. No furniture, no money, no hope. His Porsche? Gone. His savings? Vanished. His family looking at him with confusion and disappointment, asking the question that haunts every failed trader. What happened? Mark had fallen for the same trap that destroys millions of traders every year. He believed trading was easy money. Sit in a comfortable chair, click a few buttons, watch the cash roll in. No boss, no commute, no stress. Just you and endless opportunity. But that's the most dangerous lie in trading. From his rock bottom, Mark discovered something revolutionary. The market doesn't destroy traders. Traders destroy themselves. With fear that makes them sell at the worst possible moment. With greed that makes them hold losing trades too long. With ego that refuses to admit when they're wrong. Mark realized he needed to rebuild everything, but not his strategy or his system. He needed to rebuild his mind. This isn't another video about secret indicators or magic formulas. This is about mastering the only thing that truly matters in trading, your own psychology. Because until you understand why you make the decisions you make, you'll keep making the same costly mistakes over and over again. Now, let's dive into the real story of how Mark Douglas transformed from a broken, bankrupt trader into one of the most respected trading psychologists in history, and how his discoveries can save you from the same devastating fate. Trading isn't a game, and I'm about to tell you why. Every single trade tests your psychological limits. Walk in with the wrong mindset, unrealistic expectations, or poor emotional control, and you're not trading, you're gambling. Here's a hard truth. If trading seems too easy, if success looks like a quick path, if you think you're smarter than the market, stop right there. The illusion has already grabbed you, and the deeper you go, the harder it'll be to escape before serious damage happens. Trading will break you down. The real question is whether you'll wake up before the pain or after it. Every trader believes they're prepared until the market proves them wrong. Mark Douglas uncovered something profound. Every trader, no matter their background, intelligence, or money, must go through 5 psychological stages. This isn't optional. It's evolution. Just like a caterpillar must shed its skin to become a butterfly, traders must strip away every illusion, every ego-driven belief, and every false expectation before becoming someone who survives in this world. So where are you in this journey? Stage 1 is the beginning. You see someone online making 6 figures. A YouTube video promises a Lamborghini by year's end. A friend mentions making $2,000 in a day. It looks simple, exciting, like the life you've been dreaming about. So you open an account, download some indicators, watch free videos, and make your first trade. A small win happens, maybe 2 wins. Suddenly you're addicted. The dopamine rush is intense. You think you've discovered the secret. You start calculating. $200 a day means $1,000 a week, $4,000 a month, $48,000 a year, all from home. So you quit your job or double down, then everything falls apart. Losses start coming, one after another. The account starts bleeding. The setup looked perfect, but nothing works. The brutal truth? Your confidence comes from ignorance, not skill. You don't know the rules. You don't even know that you don't know. You're walking into a hurricane wearing nothing but a swimsuit. Stage 2 is where reality hits hard. The losses keep mounting. Strategies that seemed brilliant just days ago now fall apart. I switch indicators, add more screens, watch tutorial after tutorial. Nothing changes. Emotions start to spiral out of control. It feels like the market is targeting me personally. Paranoid thoughts creep in. I catch myself whispering strange questions. Why does the price always move against me? Is someone watching my trades? Blame becomes my constant companion. I point fingers everywhere. At the broker, at spread costs, at algorithmic trading, at market manipulation. Anyone but myself. Yet deep down, a terrifying realization begins to take shape. I have absolutely no idea what I'm doing. Many traders give up at this point. They declare the entire system rigged, walking away defeated and bitter. But something inside me refuses to quit. I enter the seeker phase, burning with determination. I'm going to find answers no matter what. My search becomes obsessive. I buy courses, join trading communities, watch endless interviews. I try everything: scalping, swing trading, options, crypto prop trading. My charts transform into complex landscapes that look like NASA mission control. RSI, MACD, Bollinger Bands, Fibonacci levels, all crammed onto a single screen. I collect trading strategies like precious artifacts, but my account remains stuck. Why? Because I'm making the same mistake everyone else makes. I'm searching outside for a solution that can only come from within. I keep believing that if I just find the right system, the perfect mentor, or some hidden method, success will finally be mine. What I don't understand is that no trading system can work for someone whose mind is fundamentally unbalanced. Consistent execution requires emotional stability. You can't maintain your trading edge without truly understanding yourself. This stage can drag on for years, even decades. It feels like progress, but it's really just an endless loop. Then suddenly, something breaks. Not my trading account, me. And that's when the real journey truly begins. You start to realize that the real enemy isn't the trading chart. It's the internal obstacles that hold you back. Fear paralyzes your decision making. Greed pushes you to overtrade. Ego prevents you from accepting losses. So you begin to change. You start journaling, carefully tracking your emotions and studying your own behavioral patterns. You strip away complex indicators. You simplify your approach. You focus on one setup. You find your strategy. You follow it imperfectly, but gradually improving. Slowly, you stop chasing random outcomes and start respecting the trading process. Healing begins, trust develops, and with trust comes something extraordinary: clarity. This is the master stage. Very few traders reach this level. Even fewer manage to stay here, because this transcends mere trading strategy. This becomes about personal identity. The master has stopped trying to defeat the market. They've abandoned the illusion of control. Instead, they move with the market's flow, like water adapting to its environment. They've internalized a fundamental truth: the market owes nothing. They trade with unwavering discipline. They trust mathematical probabilities. They accept whatever results emerge because they trust themselves completely. Losses no longer trigger emotional pain. Winning trades don't create excessive excitement. Everything simply exists as it is. The master doesn't need to trade. They choose to trade. Their execution is seamless. No hesitation, no second guessing, no unnecessary drama. They aren't trying to prove anything. They aren't seeking revenge. They aren't gambling. They are simply present in the moment. This represents the ultimate transformation. The price shifts against you by a single tick. No immediate concern. You take a breath, then 2 ticks pass, then 5, then 8. Suddenly your heart constricts. Breathing becomes shallow. You're paralyzed. Your brain screams to exit. But your hands remain frozen. A whisper escapes your lips. It's just a pullback. It will return. Just wait. But nothing changes. The market continues dropping. You're now deep in the red zone. Desperation sets in. You plead with the market. Just bring me back to break even. I'll close immediately. I promise. You watch helplessly as losses accumulate. Finally, at maximum pain, panic overwhelms you. You sell in terror. The instant you do, the market reverses direction. Mark Douglas witnessed this scenario hundreds of times, not with novices, but with seasoned professionals. He uncovered something groundbreaking. Fear doesn't prevent loss. It generates it. Fear hijacks rational thinking. It warps perception. It narrows vision until only your worst fears remain visible. Afraid of losing? You'll miss every opportunity. Afraid of missing out? You'll enter trades prematurely and get burned. Afraid of being wrong? You'll cling to losing positions just to prove a point. But fear runs deeper than trading mechanics. It's about what trading symbolizes. For some, it represents financial risk. For others, potential social judgment. For many, it embodies the terror of failure. These fears aren't random. They're rooted in personal history. Childhood messages echo through time. Parents struggling financially. Repeated warnings. We can't afford that. Money doesn't grow on trees. Don't be greedy. Those words didn't vanish. They embedded themselves in the subconscious, running like hidden programming. Douglas shared James's story, a millionaire with $8 million net worth. Rolex, Armani suit, corner office, yet he couldn't hold winning trades. Every time he was up $500, he'd close immediately. Why? His father's voice still resonated. Who do you think you are? You're not better than us. To the market, James was a professional. To himself, he remained a frightened 6-year-old from Detroit, desperately avoiding paternal disappointment. This was the true saboteur. This was fear's genuine nature. Here's the rewritten fragment for the narrator. Unresolved emotions clash with market uncertainty, creating trading chaos. The worst part, the market will relentlessly test your fear until you confront it directly. No avoidance, no suppression, just pure, raw confrontation. The journey begins with awareness. Your body understands what your brain hasn't processed yet. Recall your last losing trade. Where did you physically feel it? In your chest, your gut, your throat. That sensation is your early warning system. Next time it appears, stop, pause, and question. Is this trade genuinely wrong, or am I reacting from pure fear? Once fear takes control, you're no longer trading. You're merely surviving. And survival mode guarantees defeat. Neuroscience explains why. When you perceive a threat, even just price movement against you, your amygdala activates. This ancient brain alarm system immediately shuts down your prefrontal cortex, your logical center. Your intelligence plummets. You become reactive, emotional, blind. This isn't personal weakness. It's pure biology, but mastering this response is your responsibility. Mark Douglas never suggested being fearless. He advocated for self-awareness. Fear is an inherent part of trading. By recognizing, labeling, and staying present, you reclaim control. You observe the fear without becoming it. This is the first step toward true trading freedom. Let's be brutally honest. How many times have you sabotaged yourself? Closing winning trades too early from reversal anxiety, refusing to exit losing positions to avoid admitting mistakes, watching perfect trading setups slip away because of past traumas. These aren't strategic errors. They're fear-driven patterns that repeat unless deliberately interrupted. Douglas offered a powerful exercise for his students. Before each trade, ask yourself, what am I afraid of right now? Name it. Write it down. Don't hide from it. Then challenge yourself. If this fear materialized, could I handle it? Remember, you've survived every loss so far. You're still here. The real damage isn't the loss itself. It's the narrative you construct around that loss. Fear isn't your enemy. It's a signal. It reveals where your next breakthrough awaits, where healing is necessary, where your ego grips too tightly. Successful traders understand something profound about the market. They aren't fearless warriors, but calm strategists who embrace uncertainty. Losing isn't a failure for them. It's an integral part of their journey. They've learned to act from a place of clarity, not panic. Fear isn't an enemy to be avoided, but a messenger with valuable insights. Imagine being wrong most of the time and still becoming wealthy. Sounds crazy, right? But that's because society has conditioned us to believe success means being correct. In school, we're rewarded for perfect answers. In business, making the right decision earns praise. But trading operates by different rules. As Mark Douglas brilliantly explained, being right means nothing in the market. You can have a perfect analysis and still lose money. Conversely, you can make incorrect predictions and still profit. The market doesn't care about your correctness. It rewards consistent execution of a proven strategy. Amateur traders approach trading emotionally. They desperately want each trade to work, believing the market owes them a win. Professional traders think differently. They see trading as a probability game. They understand that a setup with a 60% success rate based on hundreds of similar trades is a solid approach. Let's illustrate with two trader examples. Trader A looks impressive with an 80% win rate, but their numbers tell a different story. Each win averages $100, while each loss is $500. So 80 wins generate $8,000, but 20 losses create $10,000 in losses, resulting in a $2,000 net loss. Trader B seems less successful with only a 35% win rate, yet their strategy is brilliant. Their average win is $1,000 and average loss just $200. So 35 wins produce $35,000, while 65 losses total $13,000, creating a $22,000 net profit. Most traders get trapped chasing certainty. They want a guaranteed strategy, a perfect guru who can predict everything. But true mastery lies in understanding probability, managing risk, and maintaining emotional discipline. The market holds no absolute truths. Every trade is a singular event, unpredictable and unique. A pattern that works today might completely fail tomorrow. The difference isn't in the market itself, but in randomness and chaos. Traders who can't accept this fundamental uncertainty will never trade freely. A professional trader once shared his perspective with Douglas, comparing himself to a casino. Each trade is like a customer walking through the doors. Some customers win, but most lose. In the long run, the house always comes out ahead. This wasn't arrogance, but pure mathematics. He understood his statistical edge. Over 1,000 trades, his system had a 35% win rate. He didn't fixate on individual trade outcomes. Instead, he focused on the overall distribution across time. Professional traders think differently. They don't ask, will this trade win? But is this trade part of a statistically profitable system? The market operates like a random distribution of outcomes. In short sequences of 10, 20, or even 50 trades, you might experience drawdowns, strange streaks, unexpected results. But across 100, 200, or 500 trades, your edge eventually reveals itself. It's similar to flipping a weighted coin. If heads wins you $2 and tails loses $1, you might get tails 5 times consecutively. However, over hundreds of flips, you'll ultimately profit because the odds favor you. The critical problem is that most traders never reach 100 consistent executions. They quit after 5 losses. They modify their system after 3 bad days. They change rules mid-trade. They increase trade size when feeling lucky and decrease it when scared. Essentially, they destroy their own statistical edge before it can manifest. Probability cannot work if you don't allow it space to operate. The solution? Detach from outcomes. Focus on the process. Douglas instructed his students to do one simple thing for 20 trades. Track only whether they followed their rules, yes or no. Not whether they made money, not whether they were right, just whether they executed the plan. This mental shift transforms everything. You're no longer trading for emotional highs. You're trading to gather data. You're building evidence, developing confidence, creating trust in yourself, your system, your edge. The fundamental question becomes, are you obsessed with being right? Trading isn't just about intelligence or strategy. It's about emotional resilience and self-control. Can you stay calm after losing trades? Do you stick to your system or constantly change it? The market tests your ability to handle uncertainty, not your intellectual prowess. If you keep failing this emotional test, you'll remain trapped in a destructive cycle. The ultimate truth is simple. Winning isn't about being right every time. It's about thinking in probabilities, acting consistently, and letting mathematics work its magic. True freedom comes when you stop desperately needing to know everything. That's where real mastery begins. You might have a perfectly back-tested trading system with incredible metrics, but if you can't trust yourself to execute it, the system is worthless. Most traders miss this brutal reality. Their problem isn't a strategy issue, it's a self-trust problem. Mark Douglas understood this deeply, not through academic study, but through personal devastation. After losing everything in 1982, his money, confidence, and sense of self, he was stripped bare. In that moment of complete loss, something transformative happened. For the first time, he saw the market clearly, not as an enemy, but as a reflection of himself. The market hadn't changed. He had. Patterns became obvious, opportunities emerged. But understanding wasn't enough. Knowing doesn't equal doing. So Douglas committed to rebuilding himself methodically, one rule at a time. His first rule was simple yet challenging. Place a stop loss immediately after entering a trade. Not determining its exact location, just placing it. Simple, but far from easy. On the first day, he forgot twice, remembered 3 times. Day 2, 1 forget, 4 remembers. Day 3, perfect execution, but temptation lingered. On day 4, the temptation grew stronger. His hand hovered over the mouse, but he walked away, returned, and kept the stop in place. By the end of the first week, it became automatic, as natural as fastening a seatbelt, without hesitation or internal debate. He continued building his trading system, carefully adding each rule. Rule 2 became crystal clear. Only one setup pattern with no chasing, no guessing, absolutely no exceptions. 1 week of complete focus and perfect execution. Then came Rule 3, then Rule 4. With each rule, his self-trust grew stronger. Interestingly, this wasn't about winning trades, but about keeping promises to himself. The more he followed his own rules, the more powerful he felt. Not over the market, but over himself. He understood something most traders missed completely. Self-trust isn't built by reading more books or watching more videos. It's built by consistently doing exactly what you said you would do. Every time you follow a rule, even when it feels uncomfortable, you're building inner strength. Conversely, every time you break a rule, even with what seems like a good excuse, you're weakening your personal discipline. Consider those moments when you've told yourself, just this once. Those times you rationalize breaking your own plan. The market looks different today. I'll skip my stop. I can manage it manually. How did that typically work out? These aren't strategic trading decisions. They're fundamental self-trust failures. Deep down, you knew better, but you didn't act on that knowledge. That disconnect between knowing and doing, that's what truly costs traders. Mark Douglas, who had coached hundreds of traders across hedge funds, prop firms, and trading floors, noticed something fascinating. The traders with the most knowledge were often the ones struggling most. Meanwhile, traders who rigidly followed even basic rules consistently succeeded, not because they were smarter, but because they were disciplined. Douglas called this internal alignment, and where thoughts match actions, actions match rules, and rules match core beliefs. This alignment creates a state of flow. He would often share Maria's story, a brilliant market analyst with an uncanny ability to predict price movements. Her team called her the Oracle, yet she couldn't execute her own trades. She'd identify perfect setups, watch others profit, but remain frozen. Her cursor wouldn't move. Her palms would sweat. Her heart would race. She was paralyzed by fear, not because of the trade itself, but because of her relationship with herself. A potential loss would feel like failure. A potential win would feel like unbearable pressure. Most traders prefer to lose while following someone else's instructions rather than win by trusting their own approach. The reason is psychological protection. When you follow an external plan, you can shift blame elsewhere. You can point fingers at the guru, the trading signal, or market conditions. But when you create your own strategy and deviate from it, the responsibility falls entirely on you. This realization feels heavy, yet simultaneously empowering. By accepting full ownership, you gain the ability to make meaningful changes. Building self-trust requires a structured approach. Douglas provided his students a clear framework. First, start with a single, straightforward rule. Something binary and easy to understand, like always using a stop loss. Next, track this rule's implementation daily for 1 week without making excuses. Then, carefully log every instance where you slip from the rule. The purpose isn't self-punishment, but understanding the triggers behind your deviation. The key is to celebrate consistency, not just profits or wins. Focus on execution. Gradually layer additional rules, but only after the current rule becomes automatic. The fundamental secret is understanding that self-trust isn't about confidence or motivation. It's about developing absolute certainty that you will consistently act in alignment with your core values, regardless of circumstances. Your trading results reveal more than just strategy. They reflect your relationship with yourself. Improving results means building deeper self-trust. This means trusting yourself to follow rules, stay out of unfavorable situations, accept losses gracefully, and act decisively even when emotions urge otherwise. The greatest discipline in trading isn't about controlling the market, but mastering self-control. Sometimes trading transcends ordinary experience. You'll find moments that feel almost supernatural. Staring at a chart, you'll experience a profound connection. Suddenly, everything becomes clear. You'll execute trades not with hesitation, but with absolute knowing. Your trade management becomes precise, calm. Fear and greed disappear. You enter a state of pure flow where every decision feels effortless and automatic. Time seems to slow down. This isn't luck or a temporary hot streak. This is what Mark Douglas called the highest state of trading consciousness. In this state, your ego dissolves. Fear and doubt vanish. You become completely immersed in the market's rhythm, moving in perfect synchronization. It's not mystical, it's a profound state of focused awareness. Here's the rewritten fragment. The zone isn't magic, it's a neurological state where the brain shifts into alpha-theta dominance. In this state, analytical thinking fades and intuition takes over. Traders stop thinking and start responding. Their reactions become perfectly synchronized with their training and environment. It's similar to how a jazz musician improvises seamlessly or a martial artist anticipates a strike before it happens. The same trader who previously hesitated and panicked now embodies calm precision. One trader shared with Douglas an incredible experience. Sometimes he wasn't even conscious of trading. He just knew exactly what to do. When reviewing his trades later, everything seemed perfect. Another trader described feeling so connected that it was like the market was communicating directly with him, guiding his actions. This isn't random performance. This is mastery. But there's a crucial paradox. You can't force the zone. Chasing it makes it retreat, much like trying to fall asleep. Effort destroys the very state you're seeking. The zone isn't something you enter. It emerges when all internal barriers dissolve. The real question becomes, what's preventing you from accessing this state? Douglas discovered 3 primary blockers: unresolved fear, ego attachment to outcomes, and excessive mental control. Essentially, you are the interference. Your thoughts, expectations, and pressures disrupt your natural flow. The constant internal dialogue, I must win. What if I lose again? This trade will solve everything, pulls you away from presence and clarity. The zone remains just beyond reach, waiting for you to remove the mental obstacles blocking your path. There's no internal struggle between rational thought and emotional impulse. Only pure action exists. Clean, straightforward, precise. 3-dimensional present moment awareness takes over. You aren't trapped in past regrets about a losing trade. You aren't anxiously projecting into future profit and loss scenarios. You are completely here, right now. Each market tick feels fresh and alive. Every candlestick provides pure information. Nothing is predetermined or expected. You remain unattached to anything except the current signal. When these 3 elements synchronize perfectly, something extraordinary happens. You stop attempting to control the market. Instead, you begin moving with it, like a skilled surfer riding an ocean wave. You aren't fighting the market's natural movement, but dancing harmoniously with its rhythm. You become fluid, adapting seamlessly to the chart's contours, volatility, and underlying energy. No resistance, just smooth integration. But let's be absolutely clear, this state isn't accidentally discovered. Beginners don't simply stumble into this zone. You earn this capability through relentless dedication, countless hours of screen time, broken trading accounts, disciplined journaling, years of rigorous self-correction. The zone isn't a shortcut or quick hack, it's a hard-earned reward. Consider the difference. An amateur desperately seeks the zone immediately. A professional methodically builds a robust foundation. And eventually, when ego becomes silent and mental clarity dominates, the zone naturally emerges. Legendary trader Mark Douglas once described a trader who consistently accessed this state through a meticulously designed pre-trading routine. 5 minutes of meditation, reviewing his trading plan, visualizing execution without emotional interference. By the time he opened his charts, his mind was already in perfect flow. His philosophy wasn't about preparing for the market, it was about becoming fully receptive to the market's inherent intelligence. The fundamental question becomes, do you genuinely accept uncertainty, or are you still desperately trying to be right? Do you trust your instincts, or do you constantly second guess every signal? Are you truly present, or are you trading through a hazy fog of past memories and future anxieties? The zone isn't something you activate like a switch. It's a state you allow by stopping your own interference. The ultimate truth is that you already possess this trading ability. It isn't some external, mystical skill reserved for trading geniuses. It resides within you right now, simply buried under layers of noise, ego, fear, expectations, and distractions. Clear away that mental clutter, and what remains is pure flow, effortless action, perfect alignment, trading mastery. So stop frantically chasing the zone. Prepare the groundwork for success. When the moment arrives, simply breathe and adapt. Here's a profound truth about trading that cuts deep. The more desperately you attempt to control the market, the more completely it controls you. Let that truth penetrate your understanding. Chances are your current struggles aren't due to insufficient effort. They stem from trying to manipulate something fundamentally uncontrollable. The harder you push, the more rapidly you'll collapse. Mark Douglas described this as the paradox of control. Initially, it seems counterintuitive. Aren't traders supposed to manage risk? Aren't analysis, preparation, and protection essential? Absolutely, but a critical distinction exists between managing risk and attempting to dictate market outcomes. Consider a typical scenario. You analyze a trade meticulously. The setup appears flawless. All indicators align perfectly. You enter with confidence and preparation. Suddenly, price moves against you. First a few ticks, then progressively more. An internal panic begins to rise. This wasn't supposed to happen. The setup seemed perfect. You convince yourself you must hold on. The market must return to your predicted path. Desperation takes over. You start adding to the position, doubling down, even tripling your exposure. Not because of strategic advantage, but from pure emotional need. Need to be proven right. Need to rescue the trade, need to force the market to conform to your analysis. But the market remains indifferent. It continues moving, rising, falling, or oscillating, completely unconcerned with your hopes, emotions, or account balance. Then suddenly, catastrophe strikes. Stop out, margin call, account decimated. Later, reviewing your trading journal, you rationalize. This was a manipulated move. Market makers targeted my stop. The game is rigged. I'll seek revenge tomorrow. This isn't a trader's rational assessment. It's an ego desperately gasping for survival. Contrast this with another trader facing identical conditions. Price moves against their position. They calmly reassess. Buyers are stronger than anticipated. My initial thesis was incorrect. They exit swiftly. Small loss. No emotional drama. No anger. They wait. Observe. The market reveals new behavioral patterns. When alignment becomes clear, they re-enter. This time, they ride the move smoothly to their target. Same trade, same market volatility, completely different outcomes. The difference? One trader attempted to control the market, the other controlled themselves. Here's the rewritten fragment. Trading reveals a profound contradiction. Attempting to tighten control actually blurs your vision. When you demand the market follow your predetermined plan, you become blind to its true signals. Controlling becomes a trap that disconnects you from reality and traps you in your own expectations. Mark Douglas used a surfing metaphor to explain this dynamic. The ocean operates independently of human desires. It doesn't care about your skills, intentions, or timing. No surfer can command a wave to behave exactly as they wish. Expert surfers understand this fundamental truth. They don't battle the water. Instead, they observe, sense, and adapt. They recognize their powerlessness against nature's forces. The market functions similarly. Price movements cannot be dictated. What you can manage are your personal responses, your position sizing, risk management, mental approach, and discipline. These are your tools, your strategic advantage. The pursuit of control destroys trading performance. Traders refuse small losses, creating larger ones. They ignore emerging market signals that challenge their existing beliefs. They overtrade, desperately trying to force outcomes. Some engage in revenge trading, attempting to reclaim what they perceive the market has stolen, but the market takes nothing. Traders voluntarily surrender their resources through misguided control attempts. Why do humans behave this W?